Welcome back, student. We have started with institution promoting cooperative movement. Under that, we have already started national level institutions, and we'll just have a recap what was done in the last class. We dealt with Reserve Bank of India. Under that, we have seen the measures taken by RBI for the development of cooperative and sublines. That was establishment of Agricultural Credit Department, followed by establishment of Standing Advisory Committee on Agricultural Credit, simplification of procedure of granting credit, establishment of state cooperative banks, followed by creation of special funds for financing agriculture and so on. Today we will going to deal with the recommendations of the committee, and the RBI had created two separate funds. Let us see which are those separate funds created by RBI, okay, and the recommendation put by the committee. First is National Agricultural Credit. Okay, we will going to discuss on this long-term operations fund. Then also we will going to discuss National Agricultural Credit, that is stabilization fund. Then followed by provision of finance. Under that we will going to study short-term finance, medium-term finance and long-term finance. We will going to study finance for small-scale and cottage industries, then followed by cheap remittance facilities, then advisory functions, training of cooperative personnel, regulatory functions, and establishment of an agricultural credit board. Okay, so let us discuss one by one, starting with National Agricultural Credit, that is for long-term operations fund. Now, this fund was created in February 1956, and its initial, meaning starting contribution to this fund was rupees 10 crores, and thereafter annual contribution of rupees 5 crores was to be made during first 5 years. Okay, then this contribution was raised gradually to the level of rupees 15 crores in 1966 till 1967, and later it was found that it was brought down to the level of rupees 12 crores annually for each of the years, that 1967 till 1968 and 1968 till 1969. Through these funds, the bank was to grant long-term loans to the state governments, and this was enable them to contribute to the share capital of cooperatives. Then they found in June, that is 1978, the amount standing to the credit of this fund was rupees 920 crores. Right? Then during 1978 to 1979, loans aggregating rupees 19.11 crores were advanced to the state government out of this funds. Okay, so that is about the National Agricultural Credit. Okay, the data that is based on long-term operations. Okay, so we need to write here in short is that this fund was created in 1956 with initial contribution of rupees 10 crores and annual contribution of rupees 5 crores was to be made in the first 5 years, and amount in the credit of this fund in 1978 was rupees 1920 crores. Okay, so this short note you all can write in the examination as well as you all can study. Okay, then moving ahead with National Agricultural Credit, that is stabilization of fund. Now this fund was created on 30th June 1956. Okay, here also with the initial contribution to this fund was rupees 1 crore. Okay, and then thereafter annual contribution of rupees 1 crore should be added to this fund, which was raised to provide medium term loans to state cooperative banks, and in 1981 the amount in the credit was rupees 290 crores. Okay, that was however this funds transferred to the NABARD later on. Okay, so that is something about the stabilization fund of national agricultural credit. Then moving on to next is provision of finance. Okay, so Reserve Bank of India provides short term, medium term and long term finance. Now let us see one by one what is this short term, medium term and long term finance. Now the bank provided short term finance to the cooperative banks at a concessional rate of 2% below the rate. This was for financing agricultural operations and of marketing of crops. The bank provided credit at the concessional rate to induce the state cooperative banks to utilize fully refinance facilities extended to them, by it, and it to enable them to employ required staff without hiking the rate of it. And the short-term credit sanctioned by bank gone up from rupees 112 crores in 1960 till 61 and rupees 795.5 crores in 1978 till 1979. So we can say in short, financing for seasonal agricultural operations and marketing of crops, that is short-term financing. Okay. Now moving on to medium-term financing. Here we can see is the bank provided medium-term finance to the state cooperative banks at a concessional rate of 3% below the bank rate against the guarantee of the state government, and it was given for period 3 to 5 years for the purchase of improvement of land, construction of irrigation works, purchase of agricultural equipments, livestock, construction of farmhouse, cattle sheds and etc. The medium-term credit sanction by the Reserve Bank of India had gone up from rupees 27 lakhs in 1954 till 1955 to rupees 90 crores in 1980 till 1981. Now, to sum up with medium-term finance, it was given for a period of 3 to 5 years for the purpose of improvement of land, construction of irrigation works, purchase of agricultural equipment, livestock, construction of farmhouse, cattle shed and so on. Okay, that is something about medium-term finance. Moving on to next is long-term finance. Now, in the matter of long-term finance, the bank did 3 things. Now let us see what the bank had done. 3 things. It subscribed to the debentures issued by the state cooperative agricultural and rural development banks to make up for any shortfall in public subscriptions. Then secondly, it advanced loans to the Agricultural Refinance and Development Corporation, which stand merged into National Bank for Agriculture and Rural Development now, that is also known as NABARD. Then thirdly, it advanced loans to the state government to enable them to subscribe to the share capital of cooperative institutions. Okay, so we can say in 1980 till 81, the bank sanctioned long-term credit amounting to rupees 108 crores to the government for this purpose. Okay, now to sum up with long-term finance, we have to write like subscribe to the debentures issued by state cooperative agricultural and rural development banks. Okay, advance loans to agricultural refinance and development corporations, and advance loans to state government to enable them to subscribe to the share capital of cooperative institutions. Okay, so provision of finance, we have to mention this 3 point with explanation, that is short term finance, medium term and long term finance. Moving on to next is finance for small scale and cottage industry. Now it also provided finance for small scale and cottage industries. In 1956, the Reserve Bank finalized a scheme, to finance the handloom industry through cooperatives. And under this scheme, the Reserve Bank advanced funds to the state cooperative banks at just 1.5%, that is below the bank rate. Okay, why below the bank rate? So as to enable them to finance primary weavers society at 3% rate of interest. Okay, so it should be less for them. Okay, and more small scale industries, cottage industries, they can benefit out of it. So because of that, it was kept less. And this scheme was further extended to the power looms also, okay, in the cooperative sector and small scale and cottage industries, that too in July 1968. Okay, so to sum up with, we can say finance to small scale and cottage industries, the Reserve Bank of India prepared special schemes to finance handloom industries and also to provide other financial support to small scale and cottage industries. And this scheme extended to power loom in cooperative sector and small scale cottage industry also in July 1968. Okay, that was something about finance for small scale and cottage industries. Now moving on to next is cheap remittance facilities. Reserve Bank of India also provided money transfer facilities at very low rate of transfer to provide convenience to customer, especially in rural areas. Okay, now why it so happened that realizing the importance of cheap remittance facilities in the provision of better banking facilities in the rural areas, the Reserve Bank liberalized such facilities from time to time. Okay, any cooperative society can remit amount at any place to Reserve Bank of India or its agencies at a concessional rate of exchange. Okay, that is something about cheap remittance facilities. Now moving on to next is advisory functions. The bank advised from time to time both the registrar of cooperative societies as well as cooperative banks on various issues connected with the functioning of cooperative banks. And these issues were like standard liquid resources to be maintained by the banks, investment of reserve funds of the banks, then standard of audit classification of banks, maintenance of purpose-wise registers by bank, margins to be maintained at different levels, arrangement for supervision and audit, and so on. As far as long-term finance is concerned, the bank advised the state cooperative, agricultural and rural development banks on the maintenance of sinking funds, okay, the terms and conditions of debentures, issues, organizational patterns suitable for cooperative, agricultural and rural development banks. Then also the bank formulated the programs for cooperative credit under 5-year plans. Then it reviewed their progress annually and assisted the central and the state governments and the cooperative banks in tackling the problems arising in the process of implementation. Okay, then the bank coordinated the activities of national level cooperative institutions such as National Cooperative Development Corporation and the National Federations of the State Cooperative Banks, promoted the interest of cooperative banks in various ways. It helped them to secure deposits of semi-government institutions and had extended the facility of deposit insurance to such banks. Okay, that was something about advisory functions. Now moving on to next is training of cooperative banks. Now student, you all must have heard Reserve Bank of India also provides training to employees and management of cooperative sector with the help of different training colleges, started in different parts of the country. And it had a special course of managerial personnel of cooperative banks at its training college in Mumbai. It had established another training college for cooperative personnel at Pune in 1952. Okay, so that is something about training of cooperative personnel, a short note on it. Okay, so moving on to next is regulatory functions. Okay, so now let us see what is this regulatory functions is all about. Under banking laws, okay, application to cooperative societies, Act 1965, certain provisions of Reserve Bank of India Act 1934 and the Banking Companies Act 1949 were extended to the state cooperative banks, central cooperative banks and the primary cooperative banks having paid up capital and reserves of not less than rupees 1 lakh. Okay, now there were some provisions of banking laws which was made. Application to Cooperative Societies Act 1965. There are certain provisions. Now let us see which are those provisions. All cooperative banks to which the Act applies were required to apply for a license to the Reserve Bank, that too within 3 months of the commencement of the Act. Okay. Secondly, cooperative bank, except a state cooperative bank, has to maintain either with itself or with higher financing agency a cash reserve of not less than 3% of its total demand and time liabilities. Thirdly, every cooperative bank is required to maintain liquid assets including minimum cash reserve of 3% to extent of 20% of total demand and time liabilities. Then moving next is provision. The cooperative banks except the central cooperative banks are required to obtain the permission of the Reserve Bank of India for opening their branches. And lastly, the cooperative banks are prohibited from combining trading with banking, holding non-banking assets and creation of floating charge on assets. They are required to obtain Reserve Bank's approval for investment in shares of cooperative institutions operating outside the area of operation. Okay. Then the amendment to the Reserve Bank of India Act enabled the bank to include state cooperative banks in the second schedule, and each scheduled state cooperative bank has to maintain with the Reserve Bank of India a minimum average daily balance of 3% of its total demand and time liability as against the requirement of 2.5% of demand and 1% of time liability, and in case of non-scheduled banks enjoying Reserve Bank's remittance facilities. Okay, that was something about the regulatory functions. Now lastly, moving on to next is establishment of an agricultural credit board. Now let us see why they have established an agricultural credit board and what it is all about. There were certain recommendations were made okay, of All India Rural Credit Review Committee, the bank constituted the Agricultural Credit Board in Feb 1970. Now it consists of Governor of the Reserve Bank of India as a chairperson and 13 other members. It also included representative of the Government of India, cooperative banks, commercial banks, experts on agricultural credit and so on. And it included the policy issues related to agricultural credit, okay, to this board for advice, okay, for advice from time to time. And the board has constituted two standing committees, one for advising on problems of financing in specialized field of cooperative activities such as like small scale and cottage industries, and also distribution and marketing functions and the other problems of long-term credit for agriculture. Okay students, so that was something about establishment of an agricultural credit board. Now to sum up with the recommendations of the committee, the RBI had created two separate funds, and those were National Agricultural Credit Long-Term Operations Fund, National Agricultural Credit Stabilization Fund. Then next we have seen provision of finance, under that short-term finance, medium-term and long-term finance. We also have seen finance for small scale and cottage industries, cheap remittance facilities, advisory functions, followed by training of cooperative personnel, then followed by regulatory functions, and lastly establishment of an agricultural credit board. I hope student it is clear.